Today I'm going to be teaching you what a breakout is and how you can take advantage of it. Stay tuned. How's it going, guys? Ryan here today with another episode of my trading guide, and today I'm going to share with you what a breakout is and how you can take advantage of it on the stock market, on the shares you're currently watching, and how to avoid making losses on shares that you currently hold. So to kick it off, what is a breakout? Now, a breakout is effectively when the price goes through the resistance or goes through the support levels of the stock. For those of you who don't know what the resistance or support levels are, they're effectively where there's been a significant amount of price action previously on the share, so a lot of buying and a lot of selling, and that means that there is effectively a point of resistance above the current share price and a point of support above the current share price, where the share price will tend to fluctuate between these two levels overall. Now, the breakout itself is when the price of the share goes through one of these levels. So it breaks upwards when it goes through the resistance levels, and it breaks downwards when it goes through the support levels. You'll often find that traders use these levels to determine when they're going to buy or sell their shares, as it indicates the price action that's going to occur in the future and indicates the current trend of the share price. So there's two key ways to really identify when a breakout is going to occur or has occurred. Firstly, you want to identify the current resistance and support levels of the share. And secondly, you want to be able to learn and understand different stock price patterns, different charting patterns, which will effectively show where those support and resistance levels are. So to provide you guys with an example, I have put together a simple graphic which shows the support and resistance points on a stock, and effectively what you can see is that the support level is at the very bottom and the resistance point is where there's been a significant amount of trading occurring. You can see consistently the price touches that point and tries to break through. Then eventually when it does, you can see the price absolutely shoots up and it's broken out. Now please note that the opposite can actually occur as well, so the price is hitting the support point instead, and as a result it breaks downwards, and that's when you really want to get out of the share itself. The second method you can use to your advantage is the charting patterns, as I said. So there's a few common ones which you can use. There's pennant patterns, there's flag patterns, there's cup and handle patterns, lots of different varieties of patterns, and effectively it comes down to learning these quite intimately and being able to identify them on charts. So to bring you an example of a breakout on a charting pattern, I've got a graphic from the exact same stock, the Telstra stock, and effectively what you're seeing here is a flag pattern. And as you can see, the price drastically increased in the space of about 1 or 2 days, and effectively that formed the pole of the flag. And then you can see that the price gradually declined, but it was bouncing off a common support and resistance point and staying within that sort of channel, and that's effectively what the flag bit is. Then on the day where it shot out of the top line, you can see that is the breakout of the share, and the price of it increased over the next few days. This is one of the most basic patterns to learn, as it's pretty easy to identify on a chart, and you can clearly see where the support and resistance points are based on the bouncing of the share price between the two channels. Now the real question here as a trader is, how do I take advantage of breakouts? Now there's two key ways to do that. Firstly, you want to buy a stock when you're expecting to see a breakout through the resistance point. And secondly, you want to sell a stock if you think it's going to drop through the support point. And often you'll see traders, as I said previously, using these as indicators as when to buy and sell their shares. Now often what people do, they'll wait for the breakout itself to occur, that first day where it breaks through the support or resistance point, and effectively they use this as confirmation that the trend has shifted. Now, using this is a safer sort of way of doing it because you're not trying to predict the future as much, and you can clearly see that there has been a change in the trend and a change in price action. That's all for today, guys. Hope you enjoyed the video. If you've got any queries or questions, leave them down in the comments section below. If you enjoyed the video, please remember to like it. It helps me out a lot. And for more content, remember to subscribe. And with that, hope you guys have an awesome day, and I will see you next time. Cheers.